Hello traders, you're welcome to this video. In this video, we are going to be looking at one of the best Fibonacci trading strategies. So if you are not very familiar with Fibonacci, then you might want to pay close attention as we delve deep into how to use the Fibonacci retracement and extension tools to enhance your trading strategy. Okay, so basically to use the Fibonacci retracements and extensions for identifying key support and resistance levels, um, and for spotting reversals, and enhancing trade setups, we just have to follow a couple of steps. So we're just going to be going step by step so that we can easily understand the whole process. Okay, now we're just going to be starting with plotting Fibonacci retracements. Now, before that, what are Fibonacci retracements? The Fibonacci retracements that help you identify key levels during pullbacks. Now, let us just look at how the Fibonacci retracement works, right? When you draw the Fibonacci retracement, you can see it indicates possible reversal zones. It indicates possible reversal zones, possible zones of price rejections. Okay, so the Fibonacci helps you identify key levels during pullbacks. When you have a pullback, possible levels that price could get rejected in a trending market. Okay, so it provides support and resistance levels. Okay, now when you want to use this tool, you need to first of all identify the trend. Okay, once you identify the trend, then um you know let us just go gradually. Um okay, let us I want to look for a clear bullish trend. Okay, a clear bullish trend. Okay, now we have seen a clear bullish trend around here, right? So let us use this as an example. And okay, so once you've identified the major trend on your chart, in this case we've identified a bullish trend, right? Let's just go back to that place. Identify the bullish trend. I was looking for a good example with more obvious swing lows. Okay, now this is an uptrend. We have higher highs and higher lows, so we're just going to use this as an example. Now in an uptrend, you select the swing low. Okay, the swing low, that is the bottom, and you drag the Fibonacci tool to the swing high, the next swing high, right? Okay, so this was our first swing low, and this is our first swing high. This is what we're using for the example, right? Okay, now in a downtrend, it's just going to be the opposite. Okay, in a downtrend, let's just use this as an example. You select the swing high, and then drag to the swing low. Okay, something like this, right? So this is for a sell. This is for a bearish trend. Now some key retracement levels, levels that you should be looking out for are the 23.6, the 38.2%, the 50%, the 61.8%. Some persons usually add up the 78.6% as well. Let's just add that also to the Fibonacci. Although not everyone uses that, but you can also add that to your Fibonacci. We're just gonna add this is gonna be 0.786. Yeah, and this is gonna be 78.6, right? Okay, so we can see 78.6 level has been added. So you might want to watch out for these levels. These are important levels on the chart. Okay, now the 38.2% and 61.8% are particularly strong reversal points where price tends to react, and we can see that in this particular bullish move, we can see that it was the 38.2% held that held this price. We can see that it served as a support, and then after getting there, we can see that the price got rejected and it went upwards. Okay, all right. So now, how do you use the Fibonacci extensions? Now, this is the Fibonacci retracement that we just looked at right now. Okay, basically, when price gets to the Fibonacci retracement, any of the support levels, if it's in a bullish trend, then you just want to look out for any signs of a continuation. For example, we can see that we had a doji around here, and then the next candle was bullish. After that, we could have just considered entering a buy trade, okay, and setting stop loss right below the candlestick pattern. Yeah, that would have been a good decision to make, because this 38.2% level served as a support. So right after the doji formed and we had a bullish candlestick, we would have considered entering a buy trade and then setting stop loss below here, and then a take profit level can be at the nearest resistance, or we can just use risk to reward ratio to determine it. After all, this is a trending market, so we are expecting the next high to be higher than the previous high. Okay, so a good take profit spot could have been the, okay, this was where we entered our buy, so this was the previous high, so we are expecting the next high to be higher than this, right, since this is a bullish trend. So we could have considered setting our take profit around here, or would have just waited for a potential reversal signal, because once price breaks above this, it might go up for a while, and that's exactly what happened here. And then we had a doji form. Now this doji would have been an exit signal for us, or we can use other indicators, for additional confirmation as well. All right, now for using the Fibonacci extensions, the extensions help project where the price might go after a retracement. Okay, we can use the extensions also to determine take profit targets. Okay, yeah, we can use the extensions to determine take profit targets. So let us insert the Fibonacci expansion. Okay, now in an uptrend, you start from the swing low, and you drag to the swing high, right? Drag to the swing high. This is our swing high again in this case, right? And then you drag down, okay, and then you drag down to the retracement level. Okay, this was our swing high, and then down to the retracement level we can see this. Okay, all right. Now and in a downtrend, this is for an uptrend, right? In a downtrend, you start from the swing high, just the opposite, you start from the swing high and you drag down to the swing low, right? And extend to the pullbacks high. Now the key extension levels to look out for are the 127.2, 161.8%. Some persons usually add 127.2%. Okay, if you want to add that, you can add that. But 161.8% is also one of the most common, common used. Okay, and then there's also 200% for those who use 200%. So the Fibonacci extension, you can see that this would have also been an exit point for us. Okay, should have been an exit point for us. We can see that right after the price pulled back to this point, you can see that the Fibonacci extension gave us a possible exit level, and as we can see that price actually got there, so we would have used the Fibonacci extension to exit our trade. And then in this case, we can see that the we can see that right after the pullback, we can see that the price came all the way to the 161.8. Yeah, you can see eventually the price came to the 161.8%. So after entering a sell around here, this would have been a good place to exit as given by the Fibonacci extension. Okay, now using Fibonacci levels in combination with price action can give you an edge in spotting reversals. Okay, so it's important that you look for confluence between Fibonacci levels and other technical factors like trend lines. You say it's important that you use trend lines, something like this. You know, the trend lines can also help you show dynamic reversal points. Okay, and then candlestick patterns are also very important. You can also use moving averages, all other technical indicators. You know, moving averages can also serve, you can use other momentum indicators like the RSI, stochastic oscillators, and the rest of them. Okay, and then candlestick patterns, bullish and bearish candlestick patterns, just to give you insight to possible reversal points as well. Now, what are the best ways to apply Fibonacci in your chart? It's important that you use Fibonacci in trending markets. It works best in strong trends where retracements and extensions can define support and resistance. And then it's important that you combine it with other indicators, enhance accuracy by combining Fibonacci levels with indicators like the RSI, for example. You can add on the RSI to your chart, so that you can use that to determine the momentum when you are in a trending market and we have price perhaps reversing from a Fibonacci zone. You can just use the RSI to confirm your signals, okay? And the RSI can give you overbought and oversold conditions so that you can know when a possible reversal is about to start, okay? And then focus on major price swings, draw your Fibonacci from significant highs and lows, not minor fluctuations, okay? You wouldn't want to just draw your Fibonacci from just minor fluctuation, like something like this. Now you shouldn't start drawing your Fibonacci from this particular low. Why should you draw it from here? You should use important or significant lows. Something like this should do, something like this should do, something like this should do, okay? Significant lows and significant highs, okay? Now, by mastering these Fibonacci retracement and extension techniques, you will improve your ability to identify key levels, enhance trade setups, and anticipate market reversals with greater confidence. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos. Thanks for watching and happy trading.